In this presentation, we will enter a budgeted profit and loss or budgeted income statement into QuickBooks Pro 2019. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in the home page. We currently have the open windows open. In order to open the open windows, you go to the view drop down and select the open windows list. We are now going to enter a budget into the system, which will be a plan for the future. A budget's going to be something for a business to really think about what do we expect to happen in the future. It's going to help us to set goals for the future, and then we can see performance in relation to those goals. So it's a really important step to have a budget. We're not going to go into all the different ways that we can think about how to planning the budget, what's the best way to plan the budget, and think about what our expectations will be. Those will vary from company to company and type of industry that we are in. What we will do is give some preliminary in how we would start to come up with a plan such as that, and then we'll enter this information into the system, into QuickBooks, once we have that information in an efficient way. So we'll start off by thinking about a budget in terms of the profit and loss, projecting profit and loss into the future. We'll then think about a budget for a balance sheet after this. However, when we think about a budget, typically the income statement is what we're thinking about, because a budget has to do with performance. It has to do with how are we going to do in the future. And the statement that deals with how are we doing, how are we performing, is the profit and loss, the income statement. How much are we earning? What are the expenses related that we need to expend in order to generate those earnings? So to do that, we're going to go to the reports. Let's first look at the profit and loss and reports. And we're going to go down to the company, and we're going to take a look at a profit and loss standard report. So here's our profit and loss standard. Now we only have 2 months of data so far. So that's what we need to use in order to think about what we have in order to project out into the future. So we might want to look at both those months. So we could say, okay, we're going to say, let's go to the customized reports and do it up here. We'll go to customized reports. What I'd like to use as a comparison report. So we're going to say 02/01/19, February 1st to 02/28/19, February 28th, the month of February. We're going to be accrual, and then we might want to see the previous month as well. We may also want to see these changes. So we're going to say, hey, give me the current month, the last month we did. Give me the previous month, January and February, side by side. Then tell me the difference and the percentage change. This may give us an idea of the numbers we want to put in and project into the future. So we'll say, okay, and here's what we got now. So we can look at these numbers for January and February, and then kind of think about what we think is going to happen in March, what's going to happen in the next few years, what kind of growth rates are we going to have. Now, typically, a budget, for the most part, you're going to think that it's going to be based on prior year's information or prior data in terms of the prior couple months. That's the starting point. And then we'll think about future activities. What's the market going to be like? What's our growth going to be like? What kind of factors are involved that will hopefully increase growth here? The expenses, oftentimes, we'll have some expenses that will grow. For example, cost of goods will grow typically along with increases in sales. So we can kind of tie that out. And we have other expenses that are fairly fixed. We have something like rent or something like that, then that's pretty much the same all the way across. So those are just some things to consider when budgeting. Clearly the budget will start with what happened last month, what are our expenses typically going to be, and then try to project revenue. And the way to project revenue is going to be based on past performance and just market-based assumptions that we're going to make, and that's going to be very individualized. Now what we're going to do is just show you how to enter the data. So we're not really linking the data so much to our data here. We're just going to show you how to enter the data once you have it into a budget, which will be estimating into the future. And then we'll run some reports to compare the budget and see how you can track performance as we go. So to do that, we're going to go into the companies up top, and we're going to go to planning and budgeting. Company planning and budgeting, we're going to set up budgets. And so we get this icon. It's going to be, we're going to set up the budget for 2019. We want to first do the profit and loss as opposed to the balance sheet. So this is correct. We're going to say next. And then it says additional profit and loss budget, no additional criteria. We're not going to have any job criteria. So we'll say next. Create a budget from scratch or create a budget from the previous year's actual data. Now this second one, of course, could help because that'll give us the starting point, the basis on which we can then make changes. But we're just going to create the budget from scratch here, which is a good learning process to go through that. So we'll go create the budget, and it just is going to give us the budget. We got the drop down. It's the only thing we have. This is the only budget we've been set up or created so far. And then we've got our information that will basically be the income statement. If we look at the profit and loss in our open windows over here, it starts off with income, cost of goods sold, expenses, so on. That's how that's going to be in the same order in our input screen here. And we can just start to enter data into the input screen. What we're going to do within the budget is now kind of assume that the 2 months haven't passed, as if we're making the budget for the first month of operations, January of 2019. And the reason we're going to do that is basically so that we can then have some comparison data and then imagine that January had passed, and we can then compare what we had in the budget to what had passed. So in our scenario here, we're entering the budget for our new business that we're going to start here. Hasn't started yet, and then once it starts, we enter the 2 months of information, and we can compare and contrast what we planned on to what actually happened. So then we'll start in January and we'll start to budget this out, and we're going to say merchandise revenue. We're going to say it's 500 merchandise revenue. Now the revenue, we're hoping, of course, revenue is going to increase as time passes. That's going to be the plan. That's what we expect to happen. First month of revenue, we probably may have no idea. We'll probably have a projection that could be nowhere near what it could be. So, and that's because we haven't run it yet. So we'll put the 500 there, and then we could have these options down here to copy it across or adjust row amounts. And we want to adjust row amounts. And so we're going to adjust row amounts, and we're going to say we want the currently selected month, which is what we're on now, January. So we want to make sure that we're on that cell when we click this item. And then we're going to say that there's a percentage increase. And this would be a good button to use because we're going to assume that the growth is going to have a nice steady growth. That's our plan anyway, to have the revenue. You would expect to have a nice steady growth. So we're going to say that there's going to be an increase each remaining month amount in this row by the dollar amount or percentage. So if you delete the percentage, in other words, and you put a dollar amount, it'll increase it by that fixed amount. If we keep the percentage, as we'll do here, and say 15% in our example, then we're going to say it's going to grow 15%. And then it'll grow, rather than growing in a fixed dollar amount, rather than saying revenue is going to increase by another $1,000 each month, we're going to say that it's going to increase 15% so that it grows in that format on itself. And then we'll enable the compounding down here, so that it's not just going to be growing by a straight amount. It's going to be growing and compounding on itself. So that's going to be one way that we can enter this growth. And if we say OK, we'll see what we have here. So we can say the first month was 500 times 0.15, 15% plus the 500. Gives us the 575, or we can say that 500 times 1.15, 115%, 100% plus 15% gives us that 575. The 575 times 1.15 gives us the 66125 times 1.15 gives us the 760, and so on and so forth. So that's one way we can get just this nice growth projection out here by using those adjust rows amount. Next, we're going to have the music equipment revenue. And notice you can, if you need to make these longer, you can do that by grabbing these 3 dots there and pulling them. So we probably don't need to see the whole thing, so I'll keep it there. So we got the music equipment. This is revenue that we have. So we're going to assume it's 1,000 here, and we're going to assume that's going to be the same all the way across. We don't expect that really to change. So we think we're going to rent out some music equipment and get $1,000 each time. So we're going to say 1,000. And then, so if it's going to be the same, actually, no, we're going to say let's say it increases by 1,000 each time. So we'll do an adjustment to it. We're going to say that that's going to increase to and the current month that we're on. So we're making sure that we're on that. But this time, let's increase it not by a percentage and just say we think it's going to go up by 1,000 each month. We're going to get 1,000 more each month. Not going to incrementally increase by 15%, but just have a flat 1,000 increase each month. So I've deleted the the percentage in other words, and we've got the 1,000. It still will compound on itself. So if we see that, then 1,000, then 2,000, then 3,000, and so on and so forth. And then we've got the service revenue. This was our diagnostics, and we had some teaching and tutoring revenue, I believe, was in here. We're going to say that's 2,500, and so we'll have the 2,500, and we're going to say that that's going to increase as well. So we'll adjust the row amounts, and again, I'm going to delete the $ and increase that by just 500 each time period. We think we're going to get another 500 growth in that each time. So we're going to say, okay, 2,500, 3,000, 3,500, 4,000, and so on and so forth. Then we're going to go to the cost of goods sold. And then we're going to skip the uncategorized and go to the cost of goods sold. And this one's going to be related to the merchandise sales typically. It's going to be related to the merchandise sales because we're going to have cost of goods sold is going to go up in relation to merchandise. So if we might say that, well, what the cost of goods sold is like 80%, maybe we have a 20% markup, 500 times 0.8. We would say, okay, it costs us 400, we'd sell it for 500 or something like that. And whatever our profit margin is. So we're going to say 400 and then say adjust row amounts. And then it needs to increase in the same format as this revenue, which we said increased at 15%. So we're going to say this should increase at 15% too, considering it should be about 80% of whatever's up here. And if this increased at 15, then you would think the cost of goods sold would increase at 15. So we'll say okay, and then kind of check that. We could say, well, does that make sense? I mean, if we were here, that would be cost of goods sold is 460 over the sales price up here is 575, 80%. So it's right. And then here we're going to say it's 528 divided by 661.25 is 80%. So we're keeping that basically profit margin of 20 going through the entire month or the entire year. Now we'll go some of the normal expenses, which are usually just more standardized. We're going to say something like bank charges. We're going to say, okay, it's just $10 all the time. I don't think the bank's going to be increasing the charge. It would be pretty much the same. We're going to say it's probably about $10. So let's just copy it across. So then we'll copy that across, $10 the whole time. The expenses are usually easier in this format because they'll usually be the same. They'll be more fixed a lot of times. So depreciation, we had $775 for the first month. We're going to say that's the same. We're going to have the same depreciation unless we buy more equipment. So we're going to say that's the same. And then we're going to say the insurance, once again, 1,000 we had. I thought it was a little different, but we'll say 1,000 and we'll copy that across. It'll be the same each month. Now, remember that this doesn't mean necessarily that we're going to pay cash budget of 1,000. This is kind of based on the numbers that we had on accrual budget here. So so if we want to do a cash flow budget, it would differ slightly. And then we're going to say that the interest expense is 300, and we'll copy that across. And we'll say that the internet expense, which I think we put into computer and internet. Yes, that's going to be here. I have a little worksheet here. I called it internet expense. So we'll put it in computer and internet is 150. And we'll copy that across. And then we'll skip a couple of these. We'll go to the payroll. Let's go to payroll expense. And we're going to say that's 6,000. And we're going to say that that's going to stay the same. This is another one that may increase over time. We might say we might need more payroll over time. But for here, we're going to copy that across. And then we've got the telephone. We're going to say that that is 360. And we'll copy that across. Then we've got the utilities, which we're going to say are 650, and we'll copy that across. So notice these are all pretty standard ways that we can do this. And a lot of times these numbers will come pretty close if we did a full year of information from the prior year data. Okay, let's save this. We're going to go ahead and save it and say okay. And now let's see if what happened. Let's take a look at some reports. So we're going to go to the reports up top, and we are going to go to the budget reports, and we want to take a look at the profit and loss budget overview. Let's go to the budget overview, and then it'll give us an option, and obviously the only one we have right now is the profit and loss. That's all we've made so far. So we're going to say next, and so then we can select account by month. That's what we want. Next, and click finish. There we have it. So here we have it. So now we got our entire budget. We've got all the months laid out. So January through December for the entire year, and then the total for the year would be here. So we've got our totals lining up. So this will give us some kind of comparison. Again, it's very difficult oftentimes for the first month of operations to see what exactly the budget is, but we do need the plan. We do want to have a map and think about what we're thinking will happen over time. And of course here, like a lot of businesses, we had fairly substantial loss for a few months before we start making money here, and then ending up with revenue towards the end of the year. So that could be fairly typical for startup businesses to have a fairly substantial investment in the first few years, and actually even run losses in the first year or three as they start to build things up. But that's going to be our profit and loss budget overview. We could do some of our similar changes that we have seen in the past, including the date changes and the customized reports. All those will be very similar, much the same. Let's go ahead and export this now to Excel. So we're going to go up top and create a new worksheet. And we'll also create a new workbook. And so export. And it'll open that new worksheet and new workbook. So here we have it, and we're going to go ahead and make some adjustments here. We're going to go to the View tab. We're going to get rid of the splits up top. Double click down here. We'll name it a budget for the balance sheet. Or I'm sorry, this is profit and loss. And then if we go to the view over here, the page layout, we can see it's on 2 pages again, at least. Now this could be difficult to get it to 1 page, but we would like to try. So we're going to say, all right, we can go to the page orientation, landscape, and there we have this. Also note that the budget is a report that could be really useful to export to Excel, because we might just be starting with the data within QuickBooks. We can export it to Excel, and then we could really work with different types of projections. We can try to make a worksheet to help us think, well, what if this happens? What if that happens? And do different type of analysis in projections within Excel, which can be very useful. So we might be starting with just the numbers that we have here and using that to build projections, starting with possibly the prior year numbers and then building projections based on that. So then we can try to delete some of these extra columns here. So for example, A, G, I'm holding down Control and clicking just for the drop arrow and seeing if we can delete some of these cells to fit it on a page. So we'll take a look at these items and then letting go of Control, right clicking on the selected area and deleting not the comment, but the columns. And there we have it. So it's not quite there yet. Remember that if we want to get these last couple rows on there when we print it, we can always use the fit all the columns to 1 page, and that'll kind of clean it up. Otherwise, we'd have to make some rows a little bit smaller. It looks like it would take a lot to make that work, so we would probably have to force it basically to get those columns to fit on 1 page using the printing option. So we'd have to go to File over here. We'd go to the Print, and we'd go to the No Scaling to fit all columns to a page. Fit all columns to a page. And then that makes it awfully small, but all the columns will fit then on the page. So that's going to be that item. I'm going to save this. We're going to go to File. We're going to go Save As, and we'll browse and see where we want to put this. I'm going to put it on the desktop. I'm going to put it into Get Great Guitars, into the reports, and this will be the section 11, so it's a new section. So I'm going to right click and say new folder, call it section 11. And then we'll double click on that item, call the report section 11. And I'll save that, close that. The next budgeting report we can use is the profit loss budget versus actual. So, and this one would be something we would use if we had made the budget as we did in January and February, and then the actual data had processed. We actually entered data for January and February. It has passed now, and now we're comparing what actually happened to what we planned to happen. So to that, we're going to go to the reports up top, and we're going to go back down to the budgeting. So we want to go to the budgets, and we want to go to the budget versus actual, And we will keep it here in the profit and loss and say next, and monthly correct next. And we'll finish that. So here we have it. So we have January. This is what actually happened. Here's the budget. Here's the dollar over budget. So the actual over the budget, and the percentage of the budget. So we've got this information, and it's given the information all the way through the year, but of course we've only entered data through February, so there's no data in March except for our reversing entries. So we're going to want to change the date range then. I'm going to change the date range from 01/01/19 to 02/28/19, and that'll give us our budget for the 2 months that we have been working on. So we've got February, the budget versus the actual. And of course, our data here would then be the comparison between the two. This is what we happened minus the budget. 575 is the 1,925. And this is going to be the percent of budget. So this is what actually happened. 2500 divided by the budget. 575. If we move this 2 places to the right, it's 437.8 about percent of the budget. So clearly we did a lot better in the merchandising sales than we had expected. And note, we just kind of made these numbers. It could be a lot different in the first month, of course, what our budget is and what the actual numbers are. But this is just going to be an example for us to enter this information in. So then we can see our comparisons down here and go through these and see the dollar change. And it's useful to see that percentage change as well, because the dollar amount might not give us a full perspective in terms of what the actual difference is in relation to that dollar amount, and it might be easier with the percentage change to kind of compare to trends in other companies and other businesses as well. What are they doing in terms of how close are they to their budget versus their actual numbers, even if they make a lot more money. And so we can try to see how accurate our budgeting is in relation to others if we can see their budgets versus their actual numbers. We'll go ahead and export this now. We're going to go to the Excel. We're going to create a new worksheet within Excel. And we're going to go to the existing workbook this time. We'll browse in order to find it. Drop down up top. We're going to go to Get Great Guitars. We're going to go to the reports. We're going to go to section 11 this time. Double clicking on section 11 to open it up and export. So here we have it. We're going to pull this to the right. I'm going to put it in order. We're going to pull it to the right. We're going to double click on it. We're going to change the name to, it's going to be budget versus actual or something like that. And then we can try to fit this on a page again. So first let's go to the View tab. We're going to go to unsplitting these panes. I'll get the split to go away. And then we'll try to go to the Layout and make it Orientation Landscape. And so it's still not, of course, on a page yet. We can try to delete some of these added columns. A, G, I'm holding down Control and selecting these. A, G, I, K, M, O, Q, S, U, W, Y, double A. And then letting go of Control, right-clicking those, and the selected area, and delete. So that helps. We're still not quite there. So once again, we probably would have to go to the reports or the file, print, and then force it to fit on one page, fit all columns on one page. So there we have that. Again, it's going to be a fairly small report in that format. We might want to do some other type of formatting in order to see if we can get to the same result of fitting on one page without lowering the text, but that's what we have so far. So those are our two reports for the income statement, and next time we're going to take a look at the budget for the balance sheet. For more accounting information and accounting courses, visit our website at accountinginstruction.info.